Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 39,693, down 5.02%. Ethereum currently trading at 25.56, down 1.75%. I've hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. We can see a bit of red in the market today. We would anticipate that anyway. We know price is always moving in a wave. If you're new to the channel, welcome of course. I'd just like to let you know everything I do for you is free. Twice a day, 7 days a week, I share my experience as a full-time technical trader with over 20 years of experience to assist you to be more of a financial blessing to yourself and those you love. Over many decades, I created literally thousands of rules to help me to capture opportunities and avoid losses. Rule 777, become better each day. This is a really important rule. Max Dupree, an American writer, said, "We cannot become what we need to be by remaining where we are." In our community, we're after real wealth. Real wealth is more than just money. It's security, it's love and friendship, independence, respect. Now, how do you get there? You literally get there by learning a little bit more every single day, by challenging past mistakes, past trauma, the fear that is instilled by the media, anything that you feel deficient over. When you learn, accept, and release those negative things, which is really just the fake you, it's not real. The real you is rare and unique, always learning, understanding, compassionate, loving, and kind. That behavior attracts security, love and friendship, independence, and respect. That is real wealth. That's what we're all about inside our community. Let's get into it. Rule 174, the T-cube system, trend, timing, and trigger. We're going to look at trend. We use the KS process to uncover the true trend. Investments are substitutable. That means you can put money into the S&P 500, for example, stocks. You could put it into gold or other precious metals. You could put it into Bitcoin. You could put it into bonds. You could put it into a lot of things, real estate, businesses, whatever it is. When we look at Bitcoin versus traditional assets, return on investment, the S&P is up 34%, gold is down 9% for the year, Bitcoin is up 250%. Crypto, which Bitcoin is a proxy, is quite attractive to a large number of people. Everything we do in this community has a foundation of excellence. I have a goal for us as a community to become YouTube's highest quality alt crypto trend detection system. When we look at Bitcoin and crypto, we need to understand the true trend, and if it is changing, it's really important. We don't want things to go south on us. The first thing we do is look at the KS model, which is a crypto technical trading model based on institutional price psychology. We look at the sun of the bull market. That's what section we're in at the moment. We compare that back to the sun of the bull market in previous cycles. The KS Bitcoin long view model gives us a different perspective on the market. It breaks things up into 4 phases: phase 1, phase 2, phase 3, phase 4. We're in phase 1, which is the bull market segment. We can see we've got a long way to go here compared to past bull market segments. You may look at this and say, "Ken, how can it reach up so high?" Let's have a look. This is on a logarithmic scale. Let's change it to arithmetic. Okay, you can see that price increased from a very small number up to current prices. Let's go back to log again. Now, what is this thing here, this spike? That's the liquidity blow off. That was effectively a black swan event. This is a recovery play. If we didn't have that liquidity problem, we'd be up here already. The important thing to know is the price of Bitcoin will now be driven by adoption. We look at this particular chart a lot, the technological adoption curve. We know that Bitcoin represents the essential upgrade to the internet of value. The internet grew along this white line. This is the total global internet users in millions. We see crypto growing exponentially faster. Now, how fast is it actually growing? From crypto.com, January 21, there were 106 million users. By 6 months later, it had already doubled. 6 months. Adoption is really ramping up globally. Some commentators say that Bitcoin has no value. Oops, you better tell the miners that. Bitcoin miners earn $971 million in revenue in just 1 month. Wow, $1 billion in revenue, roughly. That's not a bad effort. That certainly is above zero in terms of value. Let's have a look at some on-chain data. It's really important. This is an important knowledge gem. Bitcoin and cryptos are driven by euphoria and capitulation. Euphoria is the blue, which creates a blow-off exponential top. A blow-off exponential bottom is capitulation. We see neither at this stage. Looking at the number of transfers to exchanges, we just assume the trend will continue as it has. We're not seeing any degree of spike. Comparing the sunshine of the bull market back to the sunshine of the past bull market, comparing apples to apples. When the blow-off top occurs, unrealized profit becomes very, very high. We're not seeing that. We're quite low at the current time. This means we have a degree to go in terms of time before we see a peak. The miners also become much, much more profitable because they're selling what they have accumulated, what they've mined at a much greater price. That means the Puel multiple shoots up into this red area. We can see it's not even close to the red area currently. We conclude from all of that everything is looking quite good. Everything is on track. We still have a way to go before the peak. I've set another goal for our community to become YouTube's highest quality early warning system, that's EWS, for market sentiment shifts. What does this mean? Basically, a black swan is something that romps along and causes big problems. It can be either positive or negative, but it's generally regarded in the negative sense. We need to look at the health impacts. Anything could derail potential upward price momentum. Now, why do we need to do this? Who really cares? We're just looking at crypto, right? Unfortunately not. When the US had its liquidity crisis and the COVID pandemic shut the world down, what we saw was a weakness in Bitcoin. It dropped under critical levels. Then it plummeted. Overall, from that top to that bottom, this capitulation event, Bitcoin lost 63.32%. That is a lot of value. It lost that over 30 days. It took 136 days to bring it back up to that previous level. If you manage to buy the falling knife here, the increase in value would actually be 172%. That's why we always seek to lower the average buy price in crypto. At the same time Bitcoin was being hit, the markets were being hit. They lost this support level and they went down and down and down for about 32 days. They came down approximately 32.1% over 32 days. They rallied back up 47.28% across the next 74 days. What it really means, if we have a health scare or any other economic scare that causes us to look to risk off, to take money off the table, I will just tell you plain and simple, I believe that there is a risk off event. That means converting money into cash. That's important to share with you. Of course, you can do whatever you want. I just let you know these things. It's better to know than to not know. The Delta strain is causing a lot of economic commentators around the world to potentially see another shutdown. We have to keep our eye on it. What do? We don't listen to any news sources. We go straight for the data. What do we see here? Cases in the last 7 days, 4,046,714 cases versus 3.7 million in the week before. That's an increase of 9%. The weekly case change is what we're looking at. We want it to keep going down. That takes the risk of a global shutdown off the cards. That keeps that portfolio from decreasing 80+% and puts it into the realm of it's not going to happen. That's what we want to see. We want to see continuously decreasing percentages, those green numbers. In the influenza pandemic at the turn of the century, we had 3 waves. We're almost looking like we're having the 3rd wave now. At least the vaccine doses are out. It was not like the first wave. In the first wave, there was no protection. Things are very different now. We're not actually anticipating any kind of shutdown activity, but we must keep our eyes on it. Your portfolio really depends on you having awareness of these factors. Economic policy is really important to understand. If interest rates increase, that will increase costs. If tapering occurs, that means the money printer slows down. There's less cash circulating in the system, less cash to go into things like the stock market and less cash to go into crypto. It's important to look at the business cycle. We can see Canada is in early stage, just after early stage recovery. Let's look at the US. It's just before mid-stage recovery. China, around mid-stage. India, early stage. South Korea, early stage. Japan, early stage. Mexico, early stage. Brazil, early stage. United Kingdom, just a little bit into recovery. Germany, a little bit into recovery as well. Italy, the same as Germany and the UK. France, the same. Europe's the same, as well as Australia and Spain. As we get closer to expansion as a global economy, what will happen is that the Fed and all the central banks will start to increase interest rates because there's more jobs, people being employed, economic output, GDP all increasing. That's when the tapering will slow down. We need to keep our eyes on it. Let's have a really quick run through the economic data. We can see the M2 money stock, real M2 money stock, just decreasing a little. The effective federal funds rate is 0.08. The Fed will only really consider raising interest rates and tapering when it gets to 0.25. Looking at the gross domestic product, the GDP normalized for the US, pre-COVID is not being reached by the normalized GDP. When normalized GDP gets up into this green zone, we would expect increasing interest rates and tapering. We still have a little way to go before that happens. We can see real personal consumption expenditures fell off a literal cliff when COVID and the US liquidity crisis hit. They've recovered and now above the pre-COVID high. Federal debt, total public debt, continues to soar. And total public debt as a percentage of GDP is decreasing. The unemployment rate is sitting at around 5.9%. When it gets into this range between 4.38% and 5.13%, my estimation is the Fed will start considering increasing interest rates and tapering. The employment level hasn't regained pre-COVID highs. When it does, when it gets within these green bands, I believe we're going to see tapering and increasing interest rates then. Before that, the economy wouldn't be able to sustain it. Employment is multidimensional by nature. The employment population ratio, 25 to 54 years, hasn't recovered to pre-COVID levels. These green lines are my estimation. when tapering and increasing interest rates will be discussed by the Fed. Total non-farm private payroll employment is still below pre-COVID highs. When it gets into this green band area, I believe tapering and increasing interest rates will be discussed by the Fed. That will send a shockwave through the markets. It's really important to understand that. That's a gem. It's really important that we look at all the various measures that could be used to make these kind of assessments. The employment population ratio is still below pre-COVID highs. When it gets around these green areas, I believe there will be discussions about tapering. Tapering and increasing interest rates is called liftoff. When COVID hit, look at the continued claims. They absolutely spiked up. What we're seeing here is continued claims are still falling. When they get back to the approximate long run figures in this green area, I believe the Fed will start to talk about tapering and increasing interest rates. You can see how we're putting together a very powerful early warning system. We can see that the CPI continues to increase. That's the consumer price index. Looking at the 5-year break-even inflation rate, it's currently 2.56%. When it gets down to 2%, that will meet the Fed's price stability goal. Until then, tapering or lift-off, increasing of interest rates, is off the table. This is a little bit of a gem. If you're new to the channel, I'm putting the price of Bitcoin here in that sort of goldy orange line so you can see an association, not necessarily causation, between the two variables. When we look at the 5-year forward inflation expectation rate, we can see that it's decreased slightly. That's a good thing because that's what the Fed was talking about. It's currently sitting at 2.24%. When it gets down to 2%, that will meet the Fed's price stability goal. The 10-year break-even inflation rate is currently 2.4%. When it gets down to that 2%, it meets the Fed's price stability goal. You notice how we've got quite a few different pieces of economic data. We don't know exactly which one the Fed will use, so we cover all of them from the same perspective. Hence, for tapering and interest rates, there's no early warning sign that we're going to get that. There is still quite a gap between where we are currently and where things need to be for liftoff. Liftoff means tapering and increasing interest rates. That would be a problem to the market. We don't see that problem right now. We also need to look at flights to safety. Bonds, precious metals, and a wide range and variety of different investment options are available to investors that want to do a flight to safety. We need to keep our eye on this, the finger on the pulse always. Of course, this channel is all about the community. Every day I hook in with the community and I ask, what would you like me to cover? If you see any other economic indicators that you would like to add to this or anything else, of course, please reach out. Everything that you do as a community helps the community grow stronger. It's fantastic. I'd really welcome any suggestions. Treasuries and bonds is a very big industry. We really need to keep our eye on it. What are we looking at here? Notice the price of Bitcoin in the background, the bond futures here. The bond futures are increasing currently. They've got over this level of resistance, they're currently turning it into support. Looking at the TLT, the 20+ year Treasury Bond ETF, we can see that upward momentum in Treasury bonds. It's currently above resistance. Bonds and yields move inversely. We can see the TLT going up, the TNX, as we would expect, is going down. It is currently below resistance. The 30-year Treasury bond yield is basically at support, just holding it. High yield corporate bond ETF is just a little bit under resistance. So why are we looking at this? If we zoom back to that really large sell-off, do you see how sensitive high yield corporate bonds are to various closure issues? This can give us some advance warning signals. We're not seeing any yet, but it can give us advance warning. That's what we're all about. If we look at the Airline Index, when it fell off a cliff in the COVID shutdown, if you like, now what happened right now? We can see a degree of weakness. If we zoom in, we can see that being rejected, but we're not seeing this kind of action. It's really important to keep in mind what is happening. We don't want to panic. We need to really get a triangulation between a lot of different data points. You can see when we overlay Bitcoin's fingerprint on the Airline Index, Bitcoin is increasing currently. The transportation ETF got hit very, very hard when the economy closed down. What is it doing right now? If we zoom in, it's pretty much holding just a little bit under, but it's holding this long-term support line. I've just put on Bitcoin's fingerprint so that you can see the association. I'm not talking about causation, just association between the two. Before the US liquidity crisis and the COVID crash, what happened was utilities actually rallied very strongly. Look at this strength in the rally. Got through, rode this line, and then experienced a lot of weakness. Let's see what is happening currently. If we look at the current data, we can see price being supported, just a small breakout here coming back for the retest. It's certainly not overextended. Another gem for you is to understand how gold behaved when the sell-off was occurring. On the 25th of Feb, it was actually the 24th, but I can't move this line properly. Around the 24th, the sell-off was occurring. Look at gold. It did well, showed weakness and recovered, then capitulated down with the rest of the market, but it recovered really well. The markets recovered. So for example, the Nasdaq recovered on the 23rd of March 2020. This goes to show you gold is a flight to safety. It's a safe haven asset. We need to keep our eye on it. Let's have a look at what gold is doing at the moment. We can see it's selling back to that support level. That gives us a bit of confidence that we're not witnessing any volatility inside the market that would cause us a lot of concern. Let's travel back in time with silver. Just before the sell-off, when the sell-off started, silver was going up and then it started to come down and it broke through that support, turned it to resistance. A lower high away from that resistance level confirmed weakness, and then it sold off. Look at Bitcoin. I've just made it yellow because there's a lot of red around here. I just want to make sure that you can see it. Okay, now let's check out what's happening to silver right now. Let's have a look at silver now, current price action. What we can see is silver is under that level of resistance. It's made a fairly strong play. This is a sign of strength, not a sign of weakness. We'll keep our eye on it, but it looks okay for now. When people are new to trading and investing, it's quite common to look at any piece of news as a disaster and want to just sell everything. What we see actually is that you need a lot of triangulation. When we look at the copper price, look at this. This is so fascinating. We time travel back to when the sell-off started, just here at this date. Look at copper. Before, copper was giving us a really, really strong indication of a problem in the market. It was on a very good uptrend, but then it literally broke down mid-January. This is giving us a very good signal, and then it basically collapsed. At the capitulation, it capitulated earlier than the Nasdaq capitulated, and then it went straight up. Let's look at the current price action. What do we see here? Copper is not decaying. It's actually consolidating. This is a really, really good sign. This is our early warning system. Not one particular piece of information will give us the whole picture. Copper is looking really, really good, strong at the moment. We can say that the level of alert for a sell-off is low at the moment. Let's travel back in time to the sell-off for lumber. We can see this uptrend, weakness. It sold off when the markets were selling off. When the Nasdaq sold off, it sold off. Look at capitulation. Nasdaq incurred its capitulation earlier, lumber later. Let's check the current price action. This will probably give you a better view. You can see lumber has basically retraced to its long-term average in that sense. Nothing really that we would be concerned about here. If we look at China coal futures, we notice that there was weakness, a structural violation in this support, followed by a sell-off, capitulation, but coal kept on going down and down and down. Coal has rallied up. It's just testing the support at the moment. With this, nothing to worry about. When the US liquidity crisis hit and COVID shutdown hit, look at Brent oil. It was on an uptrend. It violated this support. It really spiked up. And then it started to crumble way before the sell-off started to happen. We're not seeing this currently in the price action. We're not seeing a reflection of a breakdown, technical breakdown in trend. That's really good. When it sold off after capitulation and in the Nasdaq 100, it took Brent oil a while to come back up and capitulate itself. Things are looking reasonable. Technical structure is in play, and we have a lot of support coming through here. You might remember when light crude oil went negative. That was a horrible day for many people. We can see crude oil, light crude oil, sold off, violated that trend line and came down, and it dropped like a brick, capitulated into negative territory. It's so far holding its long-term trend. We look at the DXY. When the sell-off started, the DXY was going up and up and up in value as a flight to safety. Then it got crunched with the rest of the market. It capitulated, and look at how it soared. If the dollar was soaring up like this or up like this, we could be worried that there is a flight to safety happening. We look at the current DXY. What do we see? Nothing, no behavior like that. This is why it's so important for us to look at so many different dimensions. A member of the community reached out and said, Ken, what's the relationship between the dollar and Bitcoin? I think this is a really good place to look at it. When the world shut down, do you see the dollar and Bitcoin moved together? When the dollar, Bitcoin started selling off before the US dollar, before the DXY sold off, and then everything came down. But you notice that the dollar found an earlier bottom and rallied very, very heavily, signifying that the end of the Bitcoin plunge was over. Let's keep this in mind. After 20 plus years in the trading game, I've heard so many associations that were proven wrong time and time again. Many people said that the DXY moved inversely to the dollar. That's in the opposite direction. So for example, when Bitcoin came up, the dollar, the DXY should go down. It didn't, it came up. When Bitcoin came down, the dollar should go up. It didn't, it went down. It's moving in correlation with Bitcoin. Now the dollar came up, what's Bitcoin doing? It's coming up. I always say suspend all judgment and have no bias. Just look at the charts. That's a really important gem for you. Don't be swayed by what the media says. It loves simplistic formula. I hate simplistic formula. I like the facts of the charts. I think you're starting to get a really good appreciation of early warning signals. We need to track those. That's really important. Many people say, Ken, should I get out of Bitcoin? Is the market going to crash? And there's so many news stories. We can go independently of the news. We can just look at the data. That's what we should do. That will help you sleep much better at night. Now let's look at the stock market through the lens of crypto stocks. Everything impacts everything. That's a really important knowledge gem. Another gem is where we focus. We're going to look at the US market because it accounts for around $56 of every $100 placed into stock markets globally. Let's have a look at the NASDAQ 100. It's holding support. The S&P 500 is also holding support. It's bounced off that support. The Russell 2000 index has bounced off this support. The Dow Jones is showing a little bit of weakness. Canada's stock market is showing strength. It's just bounced off that support. China's Shanghai Composite Index is seeking to get above this resistance. Not quite there yet. China's Technology Index is considerably below resistance. India's Sensex Index is coming back to test that long-term support and the immediate support as well. South Korea's Kospi Index is testing support. Japan's Nikkei 225 is bouncing off support. Mexico's index, the ME, has risen above the resistance and is just coming back to support. Brazil's stock exchange is showing weakness. It's broken through that support line there. The FTSE 100 UK stock exchange is testing resistance. The DAX 30 Germany stock exchange is moving up towards resistance. Italy's exchange is over resistance. France's CAC 40 has broken out of resistance. Australia's ASX 200 is showing enormous strength. Spain's IBEX 35 has broken out of this resistance. The Swiss SMI index is breaking out of resistance. Singapore's market is above support. Let's have a look at the major stocks, the FANG and other market moving stocks, and then get into the crypto stocks. Apple is just at support. Microsoft just below support. Google just below support. Amazon retracing. Facebook underneath support. Tesla starting to break out from resistance. Nvidia starting to make a play for the all-time previous high. PayPal showing an incredible amount of weakness. Netflix showing a little bit of strength, trying to get above this resistance. Square selling off to support. Now let's get into the cryptos. This is a quite important gem. You need all of that background to understand how to look at the cryptos. It's really important. Bitcoin is currently trading at $40,220. It's retraced a little bit from this structural resistance here. Let's keep on going. Total market cap is sitting at $1.604 trillion. The Grayscale Bitcoin Trust is above support. The Bitcoin Fund Canada is doing well. It's above support. BitC, CoinShares Physical Bitcoin, is still above support. The Purpose Bitcoin ETF is above support. ARK-K, the ARK Innovation ETF, is below resistance. ARK-W, Next Generation Internet ETF, is below resistance. Let's have a look at the crypto stocks. Coinbase Global is below resistance, just trying to attack it, just trying to turn it into support. Galaxy Digital Holdings coming up to resistance. MSTR, MicroStrategy, just retesting, just coming in for a retest of this resistance, seeking to turn it into support. Riot underneath resistance. Silvergate Capital Corporation underneath resistance. Marathon Digital under resistance. Voyager Digital under resistance. Hive Blockchain making a play kind of midway in the range. Bitfarms above support. ARB, Argo Blockchain, above support. BTT, Bit Digital, acting really strongly here. It's got a lot of strength. It's above support. ADE, the Bitcoin group, is just at support. And Hut 8 Mining Corporation, about midway, just seeking to challenge that resistance. We can pretty much summarize that everything is BAU, business as usual. We're not really detecting any black swans on the horizon so far. Eric Butterworth said a really beautiful thing. Don't go through life, grow through life. Wow, what great advice. Our community is really focused on real wealth. That is money plus a lot of other things that give you meaning in your life. If you have millions and millions of dollars or billions of dollars and you don't feel like you have meaning, that money is not quite as valuable as it could be. By growing through life, we can convert all past mistakes and trauma, media fear, any deficiencies that anyone might feel. That's just all in the past. Let's leave it there. Through learning acceptance and releasing it, just growing, you become the person that you were always meant to be. If you're new to the community, I'd like to send you a very big welcome. Thank you for joining us. You'll find our community just fantastic. And I'd also like to thank the moderators. The moderators keep the community safe from scammers. You're amazing people. Lots of love to you all. Thank you so much. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. Please reach out and say hi and let me know where you're viewing from. And if you have any questions, if you know anything that can add to this early warning system and you would like it covered, please reach out in the comments. I would love to hear from you. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube, and you can join us on Facebook and Discord and Twitter. It's all free, 100% free. Or why don't we have a look at the Ethereum tokens, see what they are up to. Please remember, crypto is volatile. Always prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.